Okay. So we are basically doing October-November 2017. Paper 21. Depreciation sum W limited. Are you with me?
Yes, sir.
Okay. We will read the question and first we will see what do we have to prepare, and accordingly we will prepare our own working notes. First is journal entries that is required to make the disposal. Second, provision for depreciation. Third is effect on profit. Okay. Easy. Can you, Eman, can you please read the question for me?
The directors of W Limited have provided the following balances at 1st August 2016. The company policy is to provide depreciation on motor vehicle at 20% per annum using the reducing balance method. Depreciation is charged on a month-by-month basis. During the year end 31st July 2017, the following transactions took place. A motor vehicle was purchased on 31st January 2017 at a cost of 28,230. A motor vehicle was sold on 28 February 2017 for 14,600. It had originally been purchased on 30th April 2015 at a cost of 19,500.
Appa?
There were no other additions or disposals of motor vehicle during the year. Should I read A part? State the double entry required to record the disposal of a non-current asset before the profit or loss on disposal is transferred to the income statement. Amounts are not required.
Okay, fine. So basically, one vehicle is purchased, one vehicle is sold. Depreciation on reducing balance method, month by month basis, 20% per annum. And you have to record the disposal of the non-current asset before the profit or loss on disposal is transferred to the income statement. Okay. So I'm preparing one motor vehicle account. I'm preparing one provision for depreciation account. What is the cost of the motor vehicle? 125,000. What is my year? August 16 to July 17. Are you with me?
Yep.
Yes.
I'm just doing as per the concept that I know. Okay, just to see what are the journal entries that is required for the disposal of the non-current asset before I transfer it to income statement. 5 minutes. Okay, let's see. Motor vehicle 125,000 and accumulated depreciation is 43,750. I am disposing. No, I am first purchasing a non-current asset. So whenever you have reducing balance method month by month basis, you charge depreciation on three things separately. What are the three things? On asset
First,
purchase,
then the
asset
old one,
sold, yeah,
remaining
and
assets.
remaining assets. What is your asset that you have purchased?
28,230.
28,230. So on 28,230, you will charge depreciation directly 20% for how many months? Jan month we are not using.
6 months.
February, March, April, May, June and July. 6 months. Calculate how much is it coming up to.
2823, I guess.
Into 20% into 6 divided by 12. So it is 2823. So this is for the asset that I have purchased. My depreciation is 2823. Are you with me?
Yep.
Now I have sold an asset on 20th February for 14,600. Its original cost is 19,500. So I am selling it on 20th February. Original cost is how much? 19,500. So I credit over here, and in the disposal, what do I do?
You'll also put provision, no?
First, from cost, I will remove the cost, right?
Yep.
Okay. So I'm removing the cost of the asset sold. I'm crediting in the motor vehicle account. And where will I debit it? In the disposal account. 19,500. Okay. Yes. Are you with me?
Yes, sir.
Okay. So if I have to pass journal entry for the disposal, first journal entry was to remove the cost. Which account is debited? Which account is debited?
Disposal account.
Disposal.
Disposal account is debited. So which account will be debited? The asset disposal account is debited. Which account is credited?
Motor vehicle account.
The asset account. So the disposal account is debited and asset account is credited. Both is happening at cost. Are you with me?
Yes.
Okay. Now I have to calculate the accumulated depreciation on assets sold and depreciation on assets sold for the current year. Are you all with me? Are you with me, Aman?
Yes, yes.
Yeah.
Let's take this information. I'll add a page to this and I will prepare a proper working note for for calculating the accumulated depreciation of the asset that I have sold. Come on. When is this asset purchased?
2017 Jan 30.
So this is the working note that we normally prepare: cost, depreciation, net book value. When is the asset? Was the asset purchased?
31st Jan.
30th April 2015.
Which one?
This asset that you sold.
Oh, that.
We are calculating the asset sold ka depreciation, na? One, the
Yeah.
accumulated depreciation that we have to remove and depreciation of the current year. What are my year ends? My year ends is August 16 to July 17. This is the current year. August 16 to July 17 is the current year. What would be the previous year? August
15.
16 to July 16. I had purchased on 30th April 2015. Does this fall in this year?
No, it doesn't.
So I will take one more year before that. What is that one more year before that?
August 2014.
July 15 to August 14. Yes? And I have purchased it on 30th April 2015. What is the cost of the asset? 19,500.
3 months for depreciation.
Depreciation. April हो गया. May, June and July. 3 months depreciation. What is the depreciation? Net book value? $18,525. Are you with me? Are you all with me?
Yep.
Yes, from where you got 975?
I have purchased on 30th April.
Ah, okay, okay.
Okay, 3 months depreciation. May, June, July. 19,500 into 20% into 3 by 12. Then I got net book value 18,525. 18,525 I bring over here. Depreciation 20%. $3,705. This is 14,820. Now this is my current year whose depreciation I am charging now. That means accumulated depreciation that was already included in this was how much? 3,705 plus 975. 4680. This will help me when I am going to calculate depreciation of remaining assets.
What did you do here?
What did I do here? Whenever I do written down value method and month by month basis, we calculate depreciation on three things separately, right?
Yeah.
Depreciation on asset purchase separately. Current year depreciation on assets sold separately. And depreciation on remaining assets separately. Now how do I get the remaining assets, Eman?
By removing the sold one and adding the.
So we'll do cost minus costs. Cost of all minus cost of the asset that is sold. And for depreciation, we will do depreciation minus depreciation. Accumulated depreciation minus accumulated depreciation of assets sold.
Yeah.
On day one. On day one, matlab before the starting of the current year. So I get net book value of current year. And then I remove depreciation. This I have taught before also, Eman.
Yeah.
Now let's see the current year depreciation.
What is that 4680 doing?
Sorry?
What is that 4680 doing? Down.
Yeah, 4680.
What's that?
On the day one, how much is included in this provision for depreciation?
You total date.
Not till date. Till the
Any
current year beginning.
Yeah, you totaled it, na? The upper
Yeah,
wale
I totaled it. Now in the current year, when did I sell it?
7 months, I guess. 7 months.
28th February 2017. So August, September, October, November, December, Jan, and February. 7 months, yes. So 14,820 is the net book value. And 14,820 into 20% into 7 by 12. What is the current year depreciation? 14,820 into 20% into 7 divided by 12. Current year's depreciation is 1729. Current year's net book value, matlab the net book value of the asset sold is 13,091. Are you with me?
Yes.
So depreciation of the asset sold for the current year is how much? 1729. Are you with me, Eman? So this is the income statement, the depreciation for the asset sold. 1729. Are you with me, Eman?
Yes.
अभी यहाँ पे dispose कर दो.
Does this you've put up the current year or current year only, no?
Income statement में I'll put for the current year.
Oh.
Okay. Now
Yep.
from here I will have to dispose of
Everything, no?
everything that is related to the asset sold. So 1729 is the current year's depreciation. And Purana depreciation for the past 2 years is how much? 4680. So 1729 plus 4680. So total depreciation is 6409. That I am disposing of. Are you with me?
Yes.
Okay. So what would be the second entry for disposal? First I remove cost from costs. Then I will remove depreciation for depreciation. Which account have I debited? Which account have I debited?
Others provision for depreciation.
So asset provision for depreciation is debited. 5 minutes. 5 minutes. And which account is credited?
Disposal.
Disposal account is credited. Okay. Then how much did you sell the asset for? 14,600. They don't want the entry for profit or loss on disposal. They want only entries up till removing asset from asset, depreciation from depreciation. So how much have you sold your asset for? How much have you sold your asset for?
So what do they don't want?
Read away.
State the double entry required to record the disposal of non-current assets before the profit or loss on disposal.
Okay.
So they don't want us to calculate.
They don't want a journal entry. I'm not saying they don't want you to calculate. Come on now, give me the entry of receiving cash.
Bank debit, motor vehicle credit, disposal credit.
Okay. This is done. This part A part is answered. Now, again I'm teaching. Whenever you have to chart depreciation, reducing balance method, month by month basis, how do you calculate?
Three things.
3 things. What are the 3 things? Depreciation on asset purchased separately. Did I calculate this?
Yeah.
Depreciation on assets sold separately. Did I calculate this?
Yes.
Third is depreciation on remaining assets separately. But I want the remaining assets how? On day 1. Okay? I want the
Can you
remaining assets
above?
how? On the day 1. Let's see.
Can you
So,
show your
cost minus cost. Because I have to chart depreciation at the book. What is the cost of total assets? What is the cost of total assets? What is the cost of total assets? What is the cost of total assets?
125,000?
Dua, are you there?
Yeah, Miss.
What is the cost of assets sold?
Cost of assets sold. What is it?
See na the sum.
14,600.
What 14,600 is the cost of assets sold. What is the cost of the assets sold?
19,500.
19,500. So cost minus cost. This will give me my total cost of remaining assets. $105,500. Are you with me?
Yes.
Yes.
Get
Yes.
me?
Can you show the A part?
First, let's do this. Depreciation minus depreciation. What is the depreciation on day 1?
43,750.
43,750. And what is the depreciation on this day 1 of my assets sold? This is my current year. So before the current year, what is the depreciation of the assets sold?
14,820.
How did you get 14,820? Can you see this? This is net
Oh no,
book value.
miss. Yeah, it is the net book value.
So before the day 1, what is the accumulated depreciation of assets sold?
4,680.
Are you with me, Aman?
Yeah.
So before the day 1, the accumulated depreciation of assets sold is 4680. So what is the net book value of remaining assets? $39,070. Are you with me?
Yeah.
105,500 minus 39,070.
Miss, you didn't take the current year.
No, that is what I'm explaining since the start. Asset
Because
purchased separately, assets sold separately, remaining assets on day 1 separately.
but what you're selling, uska you won't take current year.
I calculated it separately, na.
Yeah.
Alag se I calculated, right?
Yes,
Now I
1729.
want the remaining assets. So from this, I will remove the cost of the assets sold. So I will get my remaining assets which are going to be with me throughout.
Yeah, yeah.
From this, I have removed the depreciation of the assets sold. From this, I have removed the depreciation of the assets sold.
Yes.
On the day 1, so I will get accumulated depreciation of remaining assets on day 1. So I will get net book value of remaining assets on day 1. That is at the beginning of the current year. इस पे remove 20%. This is the total depreciation of the remaining assets in day 1. मतलब of the current year, 13,286. Are you with me?
Yep.
Yes.
हो गया ना? Provision for depreciation account is also made. You can have your balance closed down and begin down done. The provision for depreciation account is done. The credit side total is 61,588. From that you will minus this, so you will get your balance closed down. 55,179, and then you will get your balance begun down. 55,179. Are you with me?
Yes.
I'll do the theory of this part and then you all can practice this again once more without me. Effect of profit for the year for transaction 1 and 2. What is my transaction 1? What is my transaction 1?
Motor vehicle was purchased.
Okay, my transaction 1 is motor vehicle was purchased. What would be the effect on profit? Because I purchased
It
this
will
motor
decrease.
vehicle, I had to charge depreciation of 2823. Because I purchased this motor vehicle, I had to charge depreciation of 2823. Yes or no? Yes or no?
Yep.
Yes,
So
sir.
because of this, what happened?
Profit decreased by
Profit
2823.
profit decreased by 2823. I just erase the disposal account and make the disposal account again. Or I don't need to make the disposal account. Transaction 2. You have sold the motor vehicle. For how much? For how much?
14,600.
14,600. I have sold the motor vehicle for 14,600. The net book value of that motor vehicle is how much? 13,091. Yes,
Yeah.
you've sold for how much? Book value is 13,091. Sold for how much?
14,600.
Book value
1309.
sold for 14,600. What are you getting? Profit or loss on disposal?
Profit.
You're getting profit on disposal. How much?
One five zero nine.
1509. So profit would increase by 1509 due to profit on disposal effect of transaction 2. Okay. This is it with the sum.